afternoon and welcome to First Financial Biz Beat, presented by the Business Courier. I'm Kyla Woods. Well, 12 years ago, we were in the midst of what was called a once-in-a-lifetime economic crisis, and right now we're facing another one. On the front page centerpiece this week, how Cincinnati's largest bank on the front lines of this pandemic is more prepared this time around. Fifth Third stock has been hammered. Its earnings have plummeted. And still, CEO Greg Carmichael says even if things get more severe than in 2008, the bank will be just fine. But that doesn't mean it'll be easy. Carmichael talked with Courier reporter Steve Watkins several times for the story. And Steve joins us now via Skype with some insight. Hi, Steve.
Hi, thanks for having me.
Thank you so much for being with us today and talking more about this story. Of course, we know about the economic impact and the financial impact this is having on our community. How is Fifth Third so much better positioned than it was for the last crisis?
Well, there are a few things going on. One is, in general, banks are better capitalized, and Fifth Third is certainly among those. Fifth Third's case, they have about 50% more capital than they did last time, Greg Carmichael told me. And so they're in much better shape. They have a lot more liquidity, which is basically just excess money that they have to cushion loan losses. Now, he did say there will be loan losses, but he feels like they're positioned for them. They also do these stress tests, which basically are various scenarios that envision the economy taking a drop. And under any of those scenarios they've tested, Fifth Third emerges well capitalized. So that's a good sign. Now, he did caution they have not stress tested for something the size of a pandemic. Nobody really envisioned the entire global economy basically shutting down. So things could get worse. He did say if it's something like the Great Recession, we'll be fine. If we go back to the 1930s, like a depression, then everybody's in trouble. But Fifth Third has also planned for a downturn, and they've taken a number of steps over the last few years to get out of some of their riskier loans. He said last time he felt like Fifth Third was not in really great shape heading into the banking crisis in 2008 and 09. He feels a lot better this time around.
Well, that's encouraging, but as you just mentioned, none of us could have really prepared for this pandemic. And so how is the coronavirus impacting Fifth Third's results?
Well, it has certainly had a big impact. They reported earnings on Tuesday morning from the first quarter. That ended in March. So really only the last couple weeks were part of the coronavirus shutdown. But Fifth Third took a $518 million pre-tax loan loss provision. That doesn't mean they've suffered that amount of losses yet, but they're kind of preparing for loan losses. Greg Carmichael said there will be a lot of loan losses, and so they're getting ready for it. So that hit their earnings. Their earnings fell 96%, so pretty big drop. And as you mentioned in the open, the stock has gotten hammered. It's down. It was down as much as 50% or even a little more. So it has had a big effect, and it remains to be seen how many loan losses there will be.
And how does Greg Carmichael see Fifth Third performing through the downturn?
Yeah, he said they can manage profitably through this, so that's a really good sign and a big difference from last time. He feels like their loan loss reserves are enough, but he said he would not rule out taking another reserve if they need to, if they start seeing bigger losses than they could expect. And he mentioned they are planning for what they call a U-shaped recovery, a long, slow recovery, and not this V-shaped recovery that a lot of people are hoping for, where the economy just bounces right back. He said they're being conservative. He hopes they're wrong, but he thinks it'll be kind of a slow, gradual rise, and they're ready for it.
Well, that sounds good. Thank you so much, Courier reporter Steve Watkins, for joining us today. We'll certainly keep an eye on Fifth Third and the rest of the story around coronavirus. Thank you.
Thanks for having me.
Well, more money is being freed up for small businesses. Congress passed a nearly $500 billion aid package Thursday. Almost half is set to replenish the Paycheck Protection Program fund, which helps businesses with payroll, rent, and other expenses. The rest is earmarked for hospitals and a testing program. One business we profiled, Journey Steel, is receiving help. The Roselawn-based company received $450,000, just before the program ran out of money. President Barb Smith says that money will allow her to keep employees on the payroll. Well, the number of people out of work continues to rise. 4.4 million Americans filed for unemployment benefits last week. That brings the 5-week total to 26 million. 1 in 6 workers are currently out of a job, levels last seen during the Great Depression. And with so many out of work, food banks are seeing a record number of people. In the last month, 75% of families asking for food at the Free Store Food Bank were there for the first time. Hamilton County Job and Family Services is also seeing an increase in those applying for food stamps. Leaders with JFS say they normally see averages of about 200 applications per day, and they're now seeing 3 times that number.
Now what we're dealing with is an increased number of families that have lost their jobs, don't know where the next paycheck is coming in, and we're trying to fill that gap for them.
The Free Store is also traveling around Greater Cincinnati with emergency food boxes. There are 2 set for tomorrow, one at the Gray Road Church of Christ in Spring Grove Village. That one opens at 2 o'clock. Another one at the Lincoln Heights Missionary Baptist Church. That one is open from 4 to 6. One local restaurant that closed well before the pandemic decided to reopen in the midst of it. Keystone Bar and Grill in Hyde Park is officially open for carryout and delivery. The restaurant closed in December, but with no leasing prospects, the owners say they saw the chance to do some good. Not only is the restaurant serving the community again, but the move also allowed it to put its former employees back to work. 30 Northern Kentucky bars and restaurants just got an influx of cash. They each got $1,000 from the NKY Restaurant Relief Fund. The grants were given out after people bought gift cards to restaurants and uploaded their receipts. It was only supposed to be for about 20 restaurants, but there have been so many donations. A final round of winners will be announced next week. As you can imagine, home sales are also down right now. Sales in the region were down about 3% in March, but the Cincinnati Board of Realtors is preparing for April numbers to be, quote, pretty ugly. They're expecting a double-digit decline, and the virus has made things like showings very challenging, as many people don't want others walking through their home at this time. Students in the tri-state won't physically be going to school this school year, but there's one place that has a big space and a big screen and is ready to make a graduation reality for the class of 2020.
Seniors will have a graduation, won't get it stolen from.
The Starlight Drive-In in Amelia isn't open in the traditional sense. Instead, the staff is sprucing up the facility for events they never thought they'd host. The theater says it can host 300 cars at a time for drive-in graduations. Co-owner Jeff Groner says every high school in Greater Cincinnati has reached out to him. The theater will get back to its regular movie business May 1st.
Congratulations, man. We're going to turn in the cards, make you the #1 pick, and make you a Cincinnati Bengal.
Appreciate that, Coach. Ready to go.
Good, man.
And with that, an Ohio boy is coming home. Hear more from the newest Bengal after the break. Welcome back to First Financial Biz Beat. We want to give a shout out to Adita Dolan Mayo. She's the Director of Marketing and Business Development at PowerNet and another one of our 40 under 40 honorees.
With the first pick in the 2020 draft, the Cincinnati Bengals select Joe Burrow, quarterback, LSU.
Well, you heard it there. There's a new king of the Queen City. The Bengals took Joe Burrow, #1 overall in the NFL draft on Thursday, signaling change is here. Burrow, who broke basically every passing statistic last year at LSU on his way to the Heisman Trophy and a national championship, represents the future here in Cincinnati. And the Ohio boy is ready.
For me, it doesn't matter where you get picked. I could have been 189th pick. I could be #1. I'm going to work the exact same and try to be the best quarterback I can be for this city.
It's pretty dang good, you know, and there's not a lot of warts to it. You know, nobody's ever perfect. Everybody's got things they can improve on. There's no doubt about it. But it was exciting watching this tape, you know, and it seemed like he got better in every single game he played in.
The last time the Bengals took a quarterback #1 was Carson Palmer in 2003, and they won the division in year 3. Now, that pick also means a food pantry in Burrow's hometown of Athens is getting $10,000. That money is coming from the Jeff Ruby Foundation. The contribution is from sales of the restaurant's Steak Burrow. Ruby says it was the best-selling promotional item on the menu, selling close to 1,000 entrees when it was available. And the man likely to be replaced by Joe Burrow is still giving back to the city he's called home for close to a decade. Andy Dalton and his wife, JJ, donated $150,000 to UC Health's Crisis Response Fund. He posted a video thanking healthcare workers, and that fund provides personal protective equipment and lab supplies to expand testing. The coronavirus has sent the nation's economy into a free fall. It's unsettling, and it'll be that way for a while. To talk about the market and the long-term impact is First Financial's Chris Hagedorn. He's with the Courier's Market Engagement Director, Kelly Snyder.
Thanks so much, Kyla. Chris, thanks for being here. So obviously this is an unprecedented time. I have lots of questions for you, but first of all, a bear market showed up in March. What does that mean, and what's the current state of the market today?
Yeah, sure. So as you mentioned, the bear showed up in the month of March, and bear markets are technically defined as stock declines of 20% or more. And this bear market was unique in that the drawdown was much quicker than most have been historically. In terms of where we are today, if you look at a price chart of the S&P 500, what you'll see is a drop from top to bottom of about 34%. So well beyond that 20% bear market threshold. But the good news is that we've recovered about half of those losses since then. And of course, to no surprise, most of this market volatility is related to the widening spread of the virus and the fact that recession has become a byproduct, if you will, of trying to slow the spread in the absence of a vaccine.
So what signposts are you looking at in order to understand the degree of the progress we're making? And then after suffering such a dramatic fall off, are we out of the woods?
Yeah, so I'll answer that second question first and just say that, while certainly we would say progress has been made, we don't think we're out of the woods with respect to market volatility. And market volatility, both good and bad, are actually hallmarks of bear market backdrops. In terms of signposts that we're looking for, we put together a pretty simplistic scorecard here of various items. And the main conclusion is that, some areas are still getting worse, some areas are mixed, and some things are incremental positives. So, the fundamentals are ugly and likely to get uglier, particularly with regards to the labor market. We'll get some pretty ugly readings in the upcoming reports in April and May. On the medical side, we upgraded this from a red to a yellow. We are seeing some early signs of stabilizations in the daily increases in cases, and that they've started to plateau. And so that's been a little bit better, although the absolute number of cases are still high. And then, the real incremental positive has been, policy stimulus, which has been both sizable and swift. And that really includes the CARES Act that was passed recently, as well as really what the Fed has done. But the last thought maybe I'd leave you with here is just the idea that, we think we're further along in magnitude than we are in duration, meaning, you think about that top to bottom drop of about 34%. That's right in the ballpark of what other bear market declines have been. But I think it's also important to remember that, we think this recession started in March. And, bear markets, especially those accompanied by recessions, take a little bit of time to recover from. So again, the conclusion here is, yes, we've made some progress, but we still expect some market volatility in the near term.
That makes sense. So what are some of the ongoing issues and longer term implications that will come out of this crisis?
Yeah, so I'll break this up into two parts. From an intermediate term perspective, I think the issues that are important to be aware of are a couple. Number one, the question that investors are asking has evolved. Originally, the question was, are we headed for recession? And if so, how bad is it going to be? Now I think the question is, what does the recovery look like? So in other words, once we turn the lights back on in the economy, how many lights are actually going to turn on? The other outstanding issue just medically is figuring out a way to implement widespread testing, come up with more effective treatments and ultimately a vaccine. And I think those are really big milestone steps that we need to do in order to get the economy back to looking something like normal. From a long-term perspective, I think there are several things that we would highlight that may come out of this, some things to think about. So number one, I would say you could see more of a country-centric mentality, meaning an increase in nationalism as countries may have more of a desire to become self-sufficient as a result of this crisis. I think from a business perspective, you could very well see businesses that have a desire to bring their supply chain networks back closer to home, and the beginning of sort of a deglobalization trend, which we think could have pretty major market implications. And then lastly, just at the individual level, if you think about how we work and how we consume, those behaviors have had to, adapt very rapidly in a short period of time out of necessity. I think what could happen is those behaviors may continue if they're born out of preference. So in other words, I think you could see business models that may have to adapt to changes in preferences that may come out of this as well. So again, just some long-term things to think about.
Great. Well, thank you so much. I know how busy you must be during this time, and we look forward to having you on again soon to get an update. So
Thanks
back to you, Kyla.
Thank you so much, Kelly. Well, up next on First Financial Biz Beat, we sit down with the boss of Cincinnati Bell to chat about how the pandemic affects the company's $3 billion sale. Back in March, Cincinnati Bell reached a $3 billion deal to be acquired by a New York firm. And then the coronavirus pandemic hit. CEO Lee Fox talked about the effect of that with Courier reporter Andy Brownfield.
I'm here with Cincinnati Bell CEO Lee Fox, and I want to thank you for taking the time to appear with us this morning. I know that there's no ideal time for a pandemic to happen, but Cincinnati Bell was in the midst of finalizing an agreement to be acquired, and I was hoping you can update us as to that process and where things stand now amid the coronavirus pandemic.
Yeah, thanks, Andy. This hasn't really changed the process at all. We have a May 7th shareholder vote, which is on track. Voting has already started. Once that's over, we will continue the regulatory process, which is also ongoing. So from our standpoint, this hasn't really changed things. From the owner standpoint, this hasn't changed their thesis in us. They're very long-term oriented. They want to invest in fiber. They want to invest in technology. And I think this has only highlighted the importance of their thesis. I think, this highlighted for everyone the importance of having a robust bandwidth into the communities.
Yeah, I was hoping you could tell me what kind of impact on the network you've seen with so many companies shifting to work from home model. And then if this acquisition is approved and implemented, what that will mean in terms of your ability to build out that network.
Yeah, we've seen about a 30% increase in the base volume on the network. And, thank God we've invested quite a bit. We've seen really no issues other than sort of normal hotspots. With the deal, we're hoping to begin in 2021 quicker pace of investment. We continue to invest in fiber today, but we're really hoping to increase the pace. Our end goal is to completely replace our copper network. That's going to take us some time. It's going to take a lot of investment, but that's the end goal.
Now, I know a lot of small businesses, speaking of shifting to work from home, rely on Cincinnati Bell for their infrastructure. What have you heard in conversations with them, and what are some of the things that Cincinnati Bell is doing to address any issues that pop up?
Yeah, we've heard, like most, small businesses are struggling. So we service about 20,000 small businesses here locally, and we've reached out to about 8,000 and really just asking how we can help. And some of the help comes in form of, bill help, abatement of service, helping them transition with more bandwidth, in some cases, technology that they're missing, like computers. So those are the ways we're trying to help and really just kind of reaching out to be there for those customers as they need it through this kind of difficult transition.
Yeah, and as one of our largest companies here in Cincinnati, I was hoping you could tell me a bit about the impact this has had on your company and your employees.
Yeah, it's been hard. Safety has been kind of obviously the number one priority for us, and we started with the folks in the field. I think what people forget is we are an essential service, and we have people in the field touching customers every day. So their safety is a number one priority. But our access to PPE, if you hear hospitals are struggling to get the PPE, we are really struggling to get things like face masks. So it's taken us some time. We put initial processes in place, but we've done a lot to really help try to keep our employees safe. We've put processes in place through call centers, processes in place with those techs to allow them to, walk away from certain things if they feel unsafe. But we're doing everything we can. We've also switched from a work from home environment, which was, for us, we were very well prepared for. And so, it's like every other company, we're doing everything we can. The other thing I'm very focused on is keeping people employed.
Yeah, and I know Cincinnati Bell has done a number of other things to kind of reach out and help the community during this time. I was hoping you could tell me about some of those.
Yeah, obviously we're a part of the Keep America Connected Pact that most carriers are signed up for. Locally, there are about 4,000 customers that still have internet access that normally wouldn't because of non-payment. We've also been very active with local school systems, both, here in Hawaii or here in Cincinnati. I wish we were in Hawaii, it'd be nice weather. Here in Cincinnati and in Hawaii and in Kentucky or local areas, we've donated about $80,000 to help feed kids. We're also working with those school systems right now to try to get them connected and get families that aren't connected. One, get them connected, and two, get them technology to help them stay connected, because there's a great need with our local students to stay connected in the education system. And so we're working a lot with the educators on that.
Okay, great. Well, thank you so much for being here with us today, and hope next time we talk, it's under much healthier circumstances.
Yeah, and thanks again for having me, and stay safe.
Absolutely.
Well, thank you for joining us today for First Financial Biz Beat. For business news around the clock, visit thebusinesscourier.com. Follow us on Twitter and Facebook, and be sure to sign up for our daily emails. I'm Kyla Woods. Have a great weekend.